Thanks for joining us for another episode of Solving the Money Problem with Colleen, and this is going to be a good one. All right, what's going on, Colleen? Thanks for joining us.
Hey, Chris, thank you for having me.
You're welcome. So what I wanted to really cover today is I want to talk a lot about the infinite banking concept and your journey into this. I know that we recently just got your policy started. You did a dump in of $50,000 and then you're doing $600 a month. And we're going to talk about the logic and the reasons for doing that in a moment. But I really want to dive into, what you were thinking when you started this in terms of what is the problem or the problems that we want to solve using this concept.
So basically I had money sitting in the bank, and I know I've watched enough videos of yours about lazy money. So I thought, and also have listened to many of the presentations about the infinite banking policy. I thought that is a better way for us to buy cars and to recapture the money that we're spending, especially like, monthly credit card or whatever expenditure. So I just thought I have to get started in this, even though I don't know everything about it. I just, let's just get started and see what differences I can make.
I love it. So when you first heard about this and you first watched the 90-minute video, what was going through your head at the first go through on this? I mean, so you had money sitting in the bank that was being lazy. So we already established that, all right, we got to get that money working for us instead of working for the bank. But once you saw the concept for the first time, what were your initial thoughts?
At first I was actually like, of course the banks don't tell us about this. They don't want us to have control of our own money. So I was sort of a little bit annoyed. I don't like deceit, and I just felt like it was really dishonest that not everybody knows this. So I've really gone out of my way I don't even explain it well to my friends, and they look at me a little bewildered about because that's how I felt. I was like, there is just so much to this. It's very basic when you learn it, but at first it can be a little overwhelming to get your head around it because it's totally different to anything that we are taught in, business school, wherever. So, yeah.
Well, we're pretty much lied to all through school and college because we're never taught to be in control of our money. We're taught to give up control of our money, which is exactly why the banks are what they are, why they make the money that they do. And I love that you saw this, and at the first take of it, it seemed like it was so complicated, like it was so much information. But now that you've been doing it, you're like, well, this is actually pretty simple. I'm literally just mimicking what a bank does day in and day out, but I'm becoming the bank and I'm treating my money the same way as I would treat the bank's money. So if you will just use, your credit card, you have a couple credit cards that we're going to pay off with this. So if you're paying, I'm just going to make up, Visa a couple $100s a month trying to pay them down, the credit card company, i.e. the bank, is always winning, because they're charging you interest every month. You're doing your best to pay that down, but because of the amount of interest they're charging you, it's very difficult for people to get out of that. But a lot of people make the mistake too is the way they pay their credit cards off. A lot of people think that they should start with the highest interest rate first, but you've learned by watching the video that it's not the highest interest rate that's going to kill you. You want to start with the lowest balance because we want to get the velocity in your favor. And now, if we do that, just because a lot of people lose, the whole concept, it's very simple. If we pay off a credit card, the lowest balance first, and if you're paying $50 a month to that credit card, we pay that off. But then we take the $50 and we put that $50 back into your account every single month. You didn't change your cash flow. You didn't change the amount of money going out the door. You simply took back the money you were giving away. But if that $50 a month payment represented the credit card charging you 20%, that $50 you pay back to yourself is the same as you making 20%. And then if we just take that 20% or that $50 and we let that accumulate along with the normal deposits that you're making into your banking system, and we combine the two and then pay off the next credit card and do the same thing, and then the next one and the next one, and go right down the line, paying off the car, paying off everything, and then recapturing and recycling all the money you're giving away, it doesn't take long to then have all the wealth that you were giving away back in your bank account. And then it starts the next problem, which I know we've talked about. And the next problem is, okay, now I got all this extra money. I don't know how to make this money work for me because I've taken it all back. Now what do I do? So unpacking that to somebody is very complicated, but it's not. It's a circle. If we just complete the circle, everybody's taught the top part of a circle with money. Your money starts on the left side and it moves over to the right side, which is your bills, your expenses, your cars, and all the things you buy. But they never connect the bottom part of the circle, which is the money coming back into your bank, which your bank is this specially designed and engineered whole life that we set up for you. So once people kind of get their head around it, and once you started to learn it, what did you start thinking was the first step for you in terms of what you wanted to do with your banking system?
Well, at this point, I've been very fortunate since it's been about a year since I came across your first videos. And so in that year, so many things have happened, but I have actually paid off all the credit cards, and I did it just by giving them our cash. So because I hadn't really gotten my policy in place, so I did it wrong, and that's okay. We can do better going forward, but I've paid off everything except the house, and which is very fortunate, but it was like, now what am I going to do with the money that's in the policy and any subsequent policies that we take out? But I'm going to use it for, I watched another case study that you did where Shauna had put all of her stuff on credit card and then paid it off every month. And I thought that's good for me because I collect Delta Fly Miles, Sky Miles. So I just put it all on my American Express and pay it off every month. And that way I can get the points. And then now I think that I should be able to take the payment money out of my policy every month.
I love that.
So that's a good recapture. But also I'm going to take some of that money out and use it for investing. So I do a bit of private money lending through the Private Money Club, and that would be a good use of the money, I believe.
Absolutely. So I love that you kind of, through that other case study, by you learning and trying to expand your knowledge base, you watched the video that we did with Shauna, her case study, where she was just saying, okay, well, I don't really have debt, just like you paid off all your debts. So she wanted to make her money work, and she said, all right, well, I love points. She's using it to go to Disney World and Disneyland. You're using it for Delta Sky Miles. Doesn't matter, it's a rewards card. But now you're using your card for all your expenses, then each month paying that credit card off using your banking policy, and then just taking the amount that you would have normally given to a credit card every month for that amount and just putting it back into your policy and completing the circle.
Right.
Yeah, that's an awesome way to use this. And we haven't really done too many case studies showing that. So I love talking about that, but that leads to the second part of that equation is that sounds great, but now once you start doing that, you have a lot of extra money coming back into your policy. Then all of a sudden, now you're just like, okay, now what? And then your next phase is something that obviously has been being done before Christ. If you read the book, The Richest Man in Babylon, they lent their money out. That's what they did. So the wealthy people, as they accumulated wealth by following the laws, they basically started moving that money in the form of loans. So you then found Private Money Club and you started thinking, okay, well, I'm going to take this money and I'm going to then move that money through private loans. And this is where a lot of people, and Colleen, I want your take on this. A lot of people, when they think about private loans, they think, oh my God, that's risky. What were your initial thoughts when you saw the videos or heard about becoming a private lender, or we can simply call it becoming your own bank and lending money? What were your first thoughts on that?
Obviously, I'm not a seasoned investor by any means. I've come to most of this knowledge very late in life, which is always a shame, and you always kick yourself because I'm already in my 50s. So it's like, why didn't I learn this, when I did my MBA? Why didn't I learn this, when I did classes even at the undergraduate level or before? I didn't come from a family that talked about money, only lack of money. So a lot of this is new information, and private money lending was something I never thought that I'd be in a position to do. And being involved in the Private Money Club makes me feel a little safer. I don't know if that's a false sense of security or not, but most of the people there, it's a circle of people that you tend to want to trust. So, most of the people, and so that gave me a little more confidence.
You may not know what the Private Money Club is, but you should. And you can check that out by going to privatemoneyclub.com, and you can sign up for a free account just to see what she's talking about. It is a community of like-minded people where there's only two different things going on. There's people that have money that want to make more money. people like Colleen. And there's people that need money to make more money, like the various real estate investors. So Colleen plugged into this network, got around some really smart, like-minded people, and she started making her money go to work through this platform. So check it out. See if you like it. And if you do, that might be an avenue for you to move some of your money and make it go to work for you.
I started actually by taking money out of my really low earning TIAA CREF. I guess that's our retirement that I had for myself. I only had a very small amount in there, but I took that out and I put it with a company that you guys recommended and opened a self-directed IRA. So I did my very first private money loan through my self-directed IRA and sent that to the builders that I was investing with. And you send it to their attorney or to their closing company. So the fact that I'm not just handing someone a check made me feel a lot more confident. And when you get that money, interest payments back, that's a really nice feeling when you just see that every month going into your bank account.
I love that, because a lot of people, when they look at private lending, first off, it's not the norm. You know, they don't teach this in the MBA programs. They don't teach any banking because, you know, I think if they did, they would basically put people back in control of their money. They would hurt the banking system, which technically, if you really followed all the way up the food chain, is what controls almost everything. So why would they teach you how to do what they're doing? They want to keep you, you know, kind of in the, they don't want you to know how banking works, but you started learning this. You said some critical things there that I love. You had your money in a qualified retirement plan. Now, although you said you wish you learned this earlier in life because you thought you kind of found this a little bit too late in life, but there's never ever a wrong time to learn how to take back control. And you moved your money from your retirement that you'd saved up through your career, and then you started moving that money through loans. And the cool part you said is, I loved getting those checks every single month. Most people, when they invest their money, they don't see any real reward. Maybe they see a paper statement go up, and then they see it go down, and they see it go up, they see it go down, the roller coaster of the markets. But yours, now, it's just every month, you go to the mailbox, you open it up, and boom, there's a check. Or for some people, they pull up their statement, and boom, every month, there's more money, and that is the same amount. Well, that's the beauty about being a lender, is you are in control of the narrative. And not only that, the one thing that, Colleen, I know you love is when you lend your money, there's a tangible asset securing the amount that you lend. And that tangible asset is worth significantly more money than what you lent out, because through the Private Money Club, not only did you come into it, it made you feel more comfortable. And you said, I don't know if it's a false sense of reality. When you get around a group of other like-minded people, all doing things, and you start to learn together, that isn't a false sense of reality. That's just learning. That's actually following the person that knows how to do it, gaining wisdom or tapping into their wisdom because they've done it, and maybe some of them have failed on it. But the other thing about the Private Money Club that I find very unique is it provides a template, almost like a pathway. Like, you never gave money directly to the borrower. You put money at the attorney's office because you knew that you never give money directly to the borrower. It always goes through the proper channels. Well, banks do the same thing. Banks will never give you $300,000 or $400,000 or $500,000 in your account to then go close on the house that you want to buy. No, the money goes to a third-party escrow, and then that third-party escrow, after everything, all the T's are crossed and the I's are dotted, then the money is released from escrow, goes to the seller or the borrower of the money, and after that, everything's done. So that's what Private Money Club really does. It's a community of like-minded people that then gives you the template, the processes, and the proper way to become a private lender. So I don't think it's a false sense of reality at all. I think it just escalates and helps you with the learning process. So now that's your self-directed.
Sorry.
No, I was just going to say that's your self-directed IRA, but now we've got this policy that you started that we've been using for credit cards. But keep going with your thoughts on the lending.
The thing is, there's just such a good circle of people in there. And I've actually done loans now outside of my self-directed IRA. I set up an LLC. And then, so now I lend money. I took it from our personal savings account as a loan to the LLC. And then so I've now made loans to some of the members of the Private Money Club from my LLC. And so, yeah, and when those deals close and you get your interest back plus your principal, it's a really good day.
I love that. I love that. And, it's funny. It makes me very happy. I mean, you can't really see the joy that I'm feeling right now, but you literally are going through this process of just evolving and becoming your own banker. And just the thing where you learn to open the LLC, take money, lend it to your LLC, because that's the proper way to do it. You got to treat your money the same as you would treat the bank's money. And then lending from the LLC, which gives you the ability, number one, more protections. Number two, it makes it a legitimate business. Number three, you get some additional tax write-offs that you can do through the LLC that you couldn't personally. And then the joy you feel when you get the money back, because a lot of people, when they lend money, number one, they want to trust the borrower. Number two, they want to trust that they're going to get their monthly checks or the interest payments. And number three, they want to trust that they're going to get their principal back. So when you get the check back with all that extra stuff, it's a beautiful day. And I would agree. And after you do one, it's hard not to do more. Like for me, I've been doing this longer than you have, Colleen, and now I can't ever think of a day where I'd rather buy risky assets or risky stocks versus lending money out. Being the bank is just, to me, the ultimate. I own nothing, and I control it all through the process and through the mortgage and the security instrument. And I don't know, I think the more people that learn this, I think it would definitely change how people handle money, how they move money, and how their money works for them, just like you have. So let's get back to the banking policy, the specially designed and engineered whole life that we set up. So we're using that for the credit cards, paying it off every month, getting your Sky Miles. But what is your next thing that you're going to do? Because how we built your plan was really unique, and I want your take on this, because earlier on, off camera, we talked about how you kind of wish you would have done it different. But we took money, from your bank account, and we just dumped it in. And I always explain to people, I say, when you do that, it's like taking money from your right hand and just moving it over to your left hand, because your left hand pays you more than your right hand did. That's all a dump in is. So we dumped the 50 grand in, and then after that, you decided you wanted to do systematic deposits into your banking system. And that was $600 a month, if I'm correct.
Yeah, I think they're going to take that annually, though. I think they just pay it at the end of the year.
Perfect. So they're going to do it annually, and they just take it out one time per year. But now that we built it, and that's a very efficient design, because the high dump-in gives you the ability for all 50 grand to start earning money and interest and dividends all at once. Okay, then you got the extra money that's going in each year, which will also continue to earn interest and dividends on an uninterrupted compounding basis. But what mistakes do you think you made in setting up that first policy?
Besides not starting it, 10 years ago, I probably could have put more into it. I just didn't know enough about it, and I probably didn't even know what questions to ask. So now in hindsight, it's like, well, I could have, and also probably could have increased the amount of the annual dump in, because I've got interest coming back from my private money lending, and that has to go somewhere. And at the moment, it's just sitting in the bank being lazy. And so now I've got to find other ways to invest that as well. So yeah, I could have increased my annual contribution. I didn't realize it at the time. I guess I was just a bit unsure of how much I could put in. And when it's new, you're not always sure of what's the best way to do it.
Well, I don't think you made any mistakes, but because 91% of every one of our clients start their second banking policy inside the first year for that exact reason. Because when you first start, it's new. You've never seen something like this. It's the complete opposite of almost everything you've been taught about money. So starting small with an easy number that you're kind of like, well, if it doesn't work, it's not really anything that is out of. You're not going to be hurt hard or bad by it. Guys, when you edit that, cut that part out. I was tripping over my words. So starting small is always good. Dipping your toe in before you jump into the lake is not a bad idea, because the lake could be freezing cold. But the reason 91% of all of our clients start their second policy inside the first year is that exact reason. They dip their toe in, they start with a very conservative policy design, and then all of a sudden, the first thing that they say is, holy cow, it works exactly how you say. Which kind of to me is always like, wait, why wouldn't it work exactly how we told you it was going to? But a lot of people are like, well, I don't know, it just seemed too good to be true. And you kind of just said the same thing. It seemed too good to be true, so you're like, well, let me just test it out. But I love that you said that, because that is definitely, it makes us feel good, and it just helps us realize that a lot of people should start small, because it gets them that comfort zone, and then they start using it. It works exactly how it's supposed to, because it always works. The only way that this system, this infinite banking concept, can fail is if the person at the other end, yourself or any client, does not actually use the policy or does not move their money from the policy. They just leave it sit there, and now they got another bucket of lazy money. And even then, it's still working better than a bank account. So now that you've got this set up and you're moving money from your self-directed IRAs through the private money club, do you think you're going to start lending from your banking policy?
Oh, definitely. I don't need to pay off any debt. And obviously at my mortgage is 2.75%. So it's like, why would I pay that off? That money that I owe on my mortgage, I've got that invested. So I've got that loaned out to other people at a much higher interest rate. So the spread is still, worth not paying off my house for. So I'm going to take money out of my policy to loan out to other people so I'll get the interest that's being paid on the full amount that I deposited. And then also I'll earn interest on that amount again. So it is like double dipping, which is unbelievable. That's the part where people don't understand. They're like, wait a second, so I can save money and spend money and not interrupt the interest that I earn. Most people are of the mindset that if I put 50 grand into something, I'm going to earn interest on that, whatever that interest is or whatever they're making. But if I take the 50,000 out, I stop the interest. Now, you kind of just mentioned that you put the 50 in plus the extra money that you're putting in each year. But then if you take that money out, you never stop earning interest and dividends on that money. So it's some people would say it's almost like cheating, and to me, it's just a perpetual tailwind behind your money. You found the right environment for your money to operate in. But another thing I really want to hit on is a lot of people, when they're thinking of car payments or they're thinking of their house payment, you talked about a spread. Okay, most people don't know anything about a spread because their house is just a monthly payment, their car is just a monthly payment, but you're thinking in the sense of, okay, I've got this money that I've saved over my lifetime and that I've got into the policy and then my IRA. If I send that money out to work for me in various ways, we'll just use the lending, and I make 10%. So if you're making 10 and the cost of your money is 5, you're making a spread of 5%. You used your house. How much was your house mortgage again? 2.75%. So 2.75. So you're not willing to pay off a mortgage for 2.75% because you know that your money can go out there and earn 10 or 12% in private loans. So why would you make your money work, be lazy is kind of a way, or not have to work very hard to pay off 2.875 when it can go out and make 10? And then the spread can then be brought back. So technically, if you really think about it, your money working for you is paying for your mortgage. And then eventually your money working for you will be paying for your car. Your money working for you will then be funding all the things that you buy, all the things you drive, and all the things that you own throughout your lifetime from this point forward. Once people wrap their head around that simple concept, that if your money's just working for you, your money working for you will fund the different things that you want in life. But if you constantly go out there and you use other people's money and you reverse the roles, when using other people's money, you're just always in debt. You're always just working to pay other people, and your money's never working for you. So I love that you had that realization. We just purchased land to build eventually when the market changes a little, supply chains improve a little. We bought land to build a new house. So I thought, well, I can take some of that money out of the policy to put in, like my husband wants a big barn shed. So we can use that, pay it off, put it back in the fund, and the same with the pool. So there's that money, I can recycle it to get those extra things that we want. That's great. I just love the way you're thinking because, it's been about a year since you joined the first training or watched the first video. So in 1 year of your life, you have completely transformed the way you think about money. You've transformed the way that money actually operates and works for you. And you've transformed where your money actually sits so that you're in the proper environment, not in another environment like a regular bank or someone else's account where they're making the money on it. That's the thing I never understand is, actually, I do understand it. It's just hard for me to remember why people still do that. Is when you are trained and taught to put money in someone else's bank, the bank is the one making your money go to work for them. They're loaning that money out. They're making interest on that money, and they're paying you next to nothing. They've got it really well figured out. Well, now they've got it where you put money in a checking account, they pay you nothing. And you think that that's okay. Most people think, oh, that's okay. I mean, hey, that just is what it is. That isn't what it is. That's just because over years and years and years,
They've lied to us and conditioned us to be okay earning nothing.
Oh, I love it when I put deposit huge checks that are the principal coming back plus the interest, and I put them into my bank, and then they put a hold on it. And I'm like, it's my money. Why would you put a hold on it? 7 days, 12 days. And I'm like, this is crazy. And that's the part that really annoys me, that they can put a hold on our money. So.
All right. So Colleen, this has been awesome, but what are your long-term dreams? I mean, when you look at all the stuff you're doing and all the things that you've learned now, where does this all go into the future?
Well, we have a plan to build the house, the dream home. And so I hope to be able to recapture some of the money from our insurance policy into, the barn shed that he wants, or the pool that he wants, that we want, and recycle the money that way. I think that'll be really good. Borrow it from ourselves and not from a bank. And also, the big ultimate dream would be to have, because I'm from Australia, so I grew up on the beach, and I'd love to have a house, even if it's a short-term rental property, and have that on the beach somewhere, maybe Destin or somewhere around that area. That's the huge dream, and you should have big dreams. Not sure how I'm going to get there yet, but I feel fairly confident that we will.
Oh, I'm very confident you will. You're already moving your money's working for you. Every penny of the money that you're putting through the specially designed and engineered whole life is earning uninterrupted compound interest. I mean, it's not even a what if you get there. It's just a matter of time before you get there, because building wealth is a marathon. It's not a sprint. So all this stuff takes time. But as you can see, it just happens faster and faster and faster. It's like a snowball at the top of a mountain. Once it starts as a small little snowball. At the bottom, it'll take out a city. And that's just the velocity of how money works, and yours is going to do the exact same thing. So I can't wait till you have a beach house. Number one, Destin would be a great spot. It's beautiful there. It's the most beautiful beaches I've ever seen. The only thing I ask, just in closing, is when you do, send me an invite, and I'll see you there.
Okay.
Awesome.
Got it.
Well, Colleen, this has been great. Thank you so very much for sharing your dreams, your goals, and your whole learning process on how you've become your own bank.
Chris, I'm sure you hear it all the time, but the information that you have shared with everybody has changed our life, absolutely changed our lives. So thank you.
Oh, well, me helping you change your life changes my life as well, because that's just the universal law. You have to give unconditionally, and when you do that, your successes become mine. So thank you for sharing in that. One of the things I loved about what Colleen said is she talked about lazy money. The money that she had just sitting in the bank account, the money she just had in her old retirement account. And by her learning how to be her own bank, she learned that lazy money's got to go to work. So she sent it out to go to work, and now she's seeing the real value. It's only been a year. And now she's being her own banker, doing private loans. She's being her own banker by maximizing the rewards on her credit card and making sure the whole time she is in full control of her money, and her money never stops working for her. All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.